Hey traders, welcome back to Sunday Pips, and in today's video I'm reviewing last week's trades, what worked, what didn't, and the key lessons. My name is Jude. I'm a swing trader. I trade only Forex, but my trading strategy can be used anywhere. You can use it to trade crypto, you can use it to trade stocks. The market moves the same everywhere. It moves in higher highs and higher lows, or lower lows and lower highs. I personally love trading Forex because that's what I started with, and I got pretty used to it. I started learning how to trade on July 8th, 2024. It's been about 6-7 months. I'm kind of a beginner. Everything I know about trading, I learned it from FX Alex. I use his trading strategy. He calls it set and forget. Yeah, that's it. Let's get into it. Last week I had picked 3 pairs on Sunday to trade for that week. And if y'all know what this channel is about, every Sunday I pick pairs that I think I'll be ready to trade for the upcoming week, and I sometimes do reviews on them, just like what I'm doing right now. First up, we have GBP JPY. Last week we were creating higher highs and higher lows. Higher low, higher high, body candle close under this higher low, making this bearish. And if you're wondering how am I able to delete this the candles on my chart, that's because I'm using a indicator called no gaps candle. I don't like gaps on my chart. It kind of hinders my performance. As I was saying, we were creating higher highs and higher lows. Higher high, body candle close under this higher low, making this bearish. So this right here became the lower high, and this down here the lower low. Body candle close under this lower low, making this bearish. Making this the new lower low, and this right here the lower high. So we're bearish on the weekly, and on the daily bearish. We were creating higher highs, market structure, body candle close under this higher low, making this bearish. So this right here became the lower high, and this down here the lower low. 4-hour bullish. We're creating lower lows and lower highs, lower low, market structure. Body candle close above this lower high, making this bullish. Never body candle close under this higher low, so we're still bullish. And since I had more time frames going down, weekly and daily, we're bearish. I waited for price to get to my area of interest, and it got there. When I picked this pair on Sunday last week, we were right here at this low consolidation on the 4-hour. I was waiting for 1 hour to break out of it. I was waiting for 1 hour to break out, retest, to then go short. What I wanted for 1 hour to do happened pretty fast. It happened like 2-3 hours after the market opened. It happened around, if you look at the time at the bottom, it happened around 7-8 p.m. and I don't take trades around this time. I only take trades in London session and New York session, and where I'm at, London session starts at 3 a.m. and ends at 12 p.m. and the New York session starts at 8 a.m. and ends at 5 p.m. So this right here was not within session. That's why I never took the trade right here. But luckily, price reversed and came back into my area of interest. We were creating lower lows and lower highs, lower low, lower high, lower low on the 1 hour, and then it shifted, started creating higher highs and higher lows all the way back into my area of interest. And once it got there, let me zoom in. Once it got there, we were creating higher highs and higher lows, higher high. So this right here was the higher high. Let me use these lines, higher high. This right here, the higher low. I waited for 1 hour to shift, and the body candle closed under this higher low, making this bearish. And once it shifted, I looked for an engulfing candle. I never take a trade without an engulfing candle. I look for that engulfing candle either on the 4-hour, 2-hour, 1 hour, sometimes 30-minute. The higher the time frame the engulfing happens on, the better. In this case, it happened on the 2-hour right here, engulfing candle. Once this candle closed, I took the trade and it went into profit for a little bit, and then it reversed. Let me show you on the 30-minute. We were creating lower lows and lower highs, lower low, body candle close above this lower high, making this bullish, and it started creating higher highs and higher lows all the way back into my area of interest, and then it hit my stop loss. But since we're back into my area of interest, I waited for the exact same thing as before, a 1 hour shift of structure and an engulfing. That's why you never want to This is why you never want to change your strategy just because you took a loss. Waiting for the exact same thing. As you can see, price ended up going down. It just happened to happen right here instead of right here. But I waited for the exact same thing as before. Never switched my strategy just because of the loss. A 1 hour shift of structure. A 1 hour shift of structure. I was waiting for 1 hour to body candle close under this higher low. This right here was the higher high, and this down here was the higher low. I was waiting for it to body candle close under, and then look for an engulfing candle. And it did body candle close under, and the engulfing candle is right here. Engulfing candle. But I wasn't able to enter this trade because I was asleep when this happened. But if I was awake, I would have took this trade right around here. But I don't think I would have took this trade exactly right when this engulfing happened, because if you look at the time at the bottom, it happened around 1 a.m. And like I said, I don't take trades outside of London session and New York session. So I would have probably waited for a little bit before taking this trade. And my stop loss would have been right about the same place as before. And my take profit would have been down here. Right around here. And whenever I take a trade, I always have multiple take profits, and I final take profit. Once price gets to one of these take profits I place, it don't mean I close the trade. No, it just means it's a place I gotta watch out for, and price might reverse and go back into my stop and go to my take profit or go back to break even. Let me show you how to identify these take profits. If you look on the daily, whenever price gets to this take profit, to this zone right here. This zone was my take profit. One of my take profit, and down here, let me put this line, and this right here was my final take profit. So yeah, as I was saying, whenever price gets to this zone right here, it tends to go up. Whenever it was around here, up, goes up. Even back here too, it went up. And how to identify my final take profit, same as before. Just look for an area where price might reverse from once you get there. It wicked into this. It wicked into this black line right here. I guess I should call it an area, since let me just put this on right here. Since it looks more clean. All right there. So when price wicked into this zone right here, it went up, and here too kind of wicked in and then went up. It went up, and it does a pretty good job holding price down, so it's a pretty strong area of interest. This trade ended up being a loss, unfortunately, but it is what it is. It's part of the game. And I like leaving my risk to reward too whenever I take a trade, so I can come back, look at my mistakes, learn from them. And since I never took this trade right here, I'm gonna just remove that, and I'm gonna remove this, and this line right here is no longer necessary. But I'm gonna leave this zone right here, since price might come back into here, and then if it gives me my entry and everything else I need, I'm gonna look for sales. Next, CHF JPY. CHF JPY kind of looks similar to GBP JPY, since they both end with the JPY. So my analysis was kind of the same on both of them. Weekly was bearish last week, and it still is. We're creating higher highs. I don't know if I should count this as a higher low. If I should count it as an elbow. I guess I'm gonna count it as an elbow. If you don't know what an elbow is, it's basically these sharp turns the market makes. Let me show ya. This right here is an elbow. Make this smaller. Elbow, not an elbow, not an elbow. So this right here, elbow, not an elbow, and I guess I'm gonna count this as a as an elbow too. And I don't know if they actually called elbows. My mentor called them that, so I guess they're elbows. We were creating higher highs, higher low, higher high. Body candle closed under this higher low, making this bearish. So this right here became the lower high, and this down here the lower low. Price went up, but never body candle closed above this lower high to make it bullish, so it stayed bearish. And the body instead, it body candle closed under this lower low, making this bearish. Making a new lower low. So this right here at the lower low, and this right here at the lower high. Weekly is bearish, and daily is bearish. We were creating lower lows and lower highs, lower low, lower high, lower low. So this right here, the lower high, and this down here and this right here the lower low. And by the end of the week, we made an price body candle close under, making a new lower low right here. But I might just remove that. I might just remove those lines. And 4 hour, when I picked this pair last week, we were right here. We were right around here. We were creating higher highs and higher lows. Higher high, body candle closed above this higher high right here, making this the new higher high. This right here the higher low. A body candle closed under this higher low, making it bearish. So this right here the lower low, came the lower low, and it went up, but it never body candle closed. Never body candle close above this. As you can see, there's a little space in there. Right here, a little space, never closed above. So it stayed bearish. Since all the time frames, let me see, did I type it up? No, I never did. Hold up, copy and paste. %. Bearish. Yeah, since all the time frames were going down, I was looking for sales. Once price got to my area of interest. And like I said, when I picked this pair last week, price was right here. So all I was waiting for was a 1 hour shift of structure, and it happened. If we go down to the 1 hour, the shift of structure happened right there. We were creating higher highs and higher lows. Higher high, body candle close above this higher high. This higher high, making a new higher high. Making a new higher high. This right here the higher high, and this down here the higher low. And the body candle close under the higher low, making it bearish. I didn't want to take this trade up here because it was kind of above my area of interest. If we look at past price action, whenever price is above this area of interest, it tends to go up. For example, like right here, it went up. Wicked into here, it went up. And right here too, we came into this area of interest, and then it went up. And I bet I can find more examples to the left. So instead, I waited for price to create a new lower low on the 4 hour. So it comes and then retest under my area of interest, then look for that shift of structure on the 1 hour, then the engulfing to then take the trade. And that's exactly what happened. Price ended up creating a new lower low on the 4 hour. Body candle close under this previous lower high, making a new lower low. And then I waited for a pullback on the 4 hour. Waiting for this pullback right here. You never want to take a trade on a lower low or a higher low. Why? Let me show you. You never want to take a trade up here, because whenever price is at a higher high or a lower low, it tends to pull back. It tends to do this to then have the next push. And if we look at the opposite, whenever prices are at a lower low, never want to take a trade up here. Price will most likely do this first to then do this. It will hit your stop loss. It will hit your stop loss and then have the move. So it's better to wait for it right here than look for entries at this potential lower high to then try and catch this move that might happen. An example of it happening on the markets, on the charts. Yeah, I guess we can use this. As you can see right here, I waited for a pullback when price was at a lower low. This right here was the lower low. If I took the trade right here at this lower low, I would have been stopped out. See, price came back, created the pullback before having this move to the downside. So I waited for this pullback, and 1 hour went bullish to create that pullback. We were creating lower lows and lower highs, lower low, market structure, body candle close above this lower high, making it bullish. And from here we started creating higher highs and higher lows. And once price got here, it shifted on the 1 hour. Body candle close under this higher low, making it bearish. And I look for that engulfing candle. In this case, I think it happened on the, was it 2 hour? No, it happened on the 4 hour. Yeah, engulfing candle right here. But I never took this trade. Why? Because I never take multiple trades at the same time. And when this happened right here, I was already in GBP JPY, and that's why I never took this trade. But I like coming to the markets and leaving my risk to reward to wherever I would have took the trade if I wasn't already in one. And that's what happened right here. I just left my risk to reward to where I would have took this trade if I wasn't already in GBP JPY. And then it played out perfectly. My take profit, I identified it just like what I said before, an area where price might reverse from. Once again here, I think was right around here. Yeah, it was right around. I think I deleted the line that I had before, so I kind of don't remember where I had it before. I think it was right around here. I probably had a zone like this, because the zone is better, kind of like gets more of the, yeah. I probably had a zone. As you can see, price came back into this when price was around this zone. It went up, came to this zone, went up, and it does a pretty good job holding price down. Yeah, so that's how I identify my final take profit. And since I never took this trade, I'm gonna just remove that. I'm gonna just remove this. That's it for CHF JPY. Next we have GBP NZD. GBP NZD weekly bullish. We were creating higher highs and higher lows. Higher high, this right at the higher high, and this down here at the higher low. Body candle close. No, never body candle close under the higher low. So we're still bullish, and never body candle close above this higher high. So this is still the higher high. And daily last week we were bullish. Price was right here. When I picked this pair on Sunday to trade it for the week, daily was like this. Where's the replay? Right, I think like this. This side. It was like this. I was waiting for this to come back to this area of interest, to have a pullback in here, shift of structure on that 1 hour, engulfing to then take the trade. Take profit one would have been right here at this structure point, at this daily. Yeah, take profit one would have been at this zone right here, since we have like couple rejections, only 2 though. Rejected right here, rejected right here. So this right here would have been my first take profit. And 4 hour was, I think 4 hour was bearish. Was it? 4 hour was bearish. No, I think it was bullish. Yeah, it was bullish. We were creating higher highs and higher lows, higher high. Then right here, it shifted to come back into this area of interest. Body candle close under this higher low, making this bearish. But I never took any trades on this pair because price kind of never made it to my zone how I wanted it to. It kind of just wicked in on the daily and then had to move up. I wanted it to come down to my zone like this. See how the bodies are right in the zone. This is what I wanted, not this. So yeah. That's it for this week's trades review. Let me know down in the comments what pairs you are watching last week. And if you found this helpful, don't forget to hit the like and subscribe button and turn on the bell icon so you never miss any reviews. And stay profitable, stay disciplined, and peace. See ya next week for another review.